Want to buy a house with no money down? Can you buy a home with no money down and enjoy the advantages of home equity and not squander your rent, which today is over $1,500 to $1,700 a month just for a 2-bedroom, 1-bath apartment that is not in the demilitarized zone? And let's not forget that if you did not curry the favor of your apartment manager that I affectionately refer to as the warden of your prison, you could find yourself out on the street in short order and they do not return anything but the security deposit. Good luck with that. Well, the short answer to that is yes, you can. What's the matter? Did your top realtor in the area explain this before you wiped out your savings at a time you may need the money most, like an undiscovered termite infestation? I had a previous neighbor which I couldn't understand why did not hire me. I found out the father was a realtor, did a great job of the updates, including a new drywall in the garage which hid termite tracks. The new owner did not have an inspection until it was too late and was into ripping out the walls to the tune of $30,000 last I heard. Many potential home buyers wonder how much money they'll need to buy a house and what to save just to get a mortgage. But did you know it's possible to buy a home without needing the upfront funds for a down payment? Let's look at some options you have when you want to buy a home without a down payment. We'll also explore some low down payment alternatives and what you can do if you have a low credit score. Okay, understanding a zero down payment mortgage as the name suggests, a zero down payment mortgage is a home loan you can get without a down payment. A down payment is the first payment you make toward the home, and it's due when you close on your home loan. Lenders usually calculate your down payment as a percentage of the purchase price of the home. For example, if you buy a home for $200,000 and you have a 20% down payment, you'll bring $40,000 to the table at closing. Lenders require a down payment because they believe you'll be less likely to default on your loan if you have upfront investment in your home. Down payments are a major hurdle for many home buyers because it can take years to save up a lump sum of cash. The only way to get a zero down payment mortgage from major mortgage investors is through a government-backed loan, which is issued by the federal government. In other words, the government, along with your lender, helps foot the bill if you stop paying back your mortgage. The government offers guaranteed loans to people who need financial assistance when buying a home. This means that government-backed loans are less risky for the lender. The lender can expand their usual loan offerings to people with riskier financial profiles, such as borrowers with no down payment. Two types of sponsored loans, VA loans and USDA loans, which allow you to buy a home without a down payment. Each of the two loans has a very specific set of criteria you must meet to qualify for a zero down mortgage. You may want to opt for a government-backed FHA loan or a conventional mortgage if you find out you don't meet the qualifications for a VA loan or a USDA loan. Both VHA loans and conventional loans will allow you to make a low down payment. Options for a no down payment mortgage. Let's take a look at how you can get a VA loan or a USDA loan, the two loans that allow you to buy a home without a down payment. VA loans. You may qualify for a VA loan if you're an active duty service member, military veteran, past or present member of the National Guard or Reserve, or the surviving spouse of a deceased veteran. Insured by the Department of Veteran Affairs, a VA loan can be an attractive option if you hope to avoid a down payment on a home purchase. Putting down less than 5% allows you to pay a one-time VA funding fee that's 2.3% of your loan value and in lieu of a mortgage insurance. For any subsequent uses of a VA loan, the funding fee is 3.6%. To qualify for a VA loan, you'll need to meet any one of the following service requirements, which in some cases can vary from this based on dates of service. 90 consecutive days of active service during wartime, 181 consecutive days of active service during peacetime, more than 6 years of service in the National Guard or Reserve, or at least 90 days under Title 32 orders, with at least 30 of those days being consecutive. You were discharged by reason of service-connected disability. You're the qualifying spouse of a service member who died in the line of duty or from a service-related disability. In addition to service requirements, which you could explore in greater detail here by contacting me directly, you'll need a credit score of at least 580 to get a VA loan. Other lenders may have a different credit score requirement. USDA loans. Okay, USDA loan is a loan backed by the United States Department of Agriculture. The government offers USDA construction loans and USDA loans to encourage development in rural suburban areas. You can get a USDA loan with zero down. USDA loans also have lower fees than other types of loans. Both you and your home must meet a few criteria to qualify for a USDA loan. First, your home must be in a rural or suburban area. In addition, your home can't be a working farm. It must be a single family unit. You must treat the home as your primary residence. You'll also need to meet a few financial requirements to qualify. The combined gross income in your household can't be more than 115% of the median income of the area your home is in. Your debt to income ratio shouldn't be higher than 45%, and you should have a FICO score of at least 640 for the best chance of qualification. Options for a low money down mortgage don't qualify for a USDA or VA loan. Ways you can beat a home mortgage without spending years of savings for a down payment. Let's learn more about low down payment loan options. Conventional loans without PMI. Many people believe that if they want to get a conventional loan, any loan not insured by the federal government, they need a 20% down payment. This isn't actually true, though. Depending on your lender, you may get a loan with as little as 3% down if you're a first-time home buyer who is someone who hasn't owned real estate the last 3 years. The confusion about the minimum down payment often comes from the private mortgage insurance PMI requirement. Your lender will require you to pay PMI as a condition of your loan if your down payment is less than 20% of the loan amount. PMI gives your lender protection if you quit making loan payments. Although you're the one paying for it, PMI offers no benefits to you. As a result, most homeowners want to cancel PMI as soon as possible. You can contact your lender and request that they cancel your PMI plan as soon as you reach 20% equity in your home based on payments. Home Ready and Home Possible loans from Fannie Mae and Freddie Mac. You may also want to consider a Home Ready mortgage from Fannie Mae or a Home Possible loan from Freddie Mac. If you have a low to moderate income compared to others in your area, both loans allow you to buy a home with a 3% down payment and lower mortgage insurance options. You can't earn more than 80% of your area's median income and still qualify. But unlike USDA loans, the stipulation only applies to the parties on the loan, not your entire household. Freddie Mac Borrower Smart SM. Freddie Mac Borrower Smart is a 3% down payment option, but what makes it unique is that it gives a credit towards the down payment for very low income clients. If your income is less than or equal to 50% of the county area median income, you can get a grant of up to $2,500. If your income is more than 50% but less than or equal to 80% of the area median, you could get a credit of $1,250 towards your down payment. To qualify, you'll need a FICO score of 620 or better. Debt to income ratio requirements can vary, but should never be higher than 50%. Also required is home ownership education. Purchase Plus. Special purpose credit programs are targeted to help those in undeserved communities have equal access to lending and credit systems in the U.S. This opens up home ownership as an option for building general wealth to demographics that may have particularly struggled accessing the financial system in the past. Those currently residing in eligible consensus tracts receive a base credit of $5,000. Here are a few additional qualifications. At least one client must be a first-time home buyer. You must be purchasing a primary residence. You need to have a 3% down payment. The credit counts towards this total. FHA loans. FHA loans, which you can get with as little as a 3.5% down, are backed by the Federal Housing Administration and are loans for people who have low to moderate income. FHA loans carry fewer requirements than USDA and VA loans. For these loans, you must plan to live in the property you're buying as your primary residence. Buy a home that meets livability standards and move in within 60 days of closing. It's important to keep in mind that you'll likely need to make mortgage insurance payments until the loan is paid off if your down payment is under 10%. Some people get a FHA loan, wait until they build 20% equity in their property, and then refinance to a conventional loan as a workaround. This eliminates the lifetime mortgage insurance requirement. Fakes about getting a zero down mortgage here are some frequently asked questions about buying a house with no money down. How do I know if zero down or money down loan is right for me? If you meet the requirements and qualify for a USDA, VA, FHA, Home Ready, or Home Possible loan, not having to pay an enormous down payment is an advantage, especially if you still have to pay closing costs, which many times I can work into the contract, leaving you with truly zero down transaction. Avoiding or reducing your down payment means you have savings to fall back on when emergencies arise, like I said earlier. It isn't necessarily a better financial decision to put more money down than less. Making the full 20% down payment and avoiding PMI isn't ideal if it means wiping out your savings account. Take a close look at your finances and make sure you explore all of your options before putting money down on a house. What are my options if I don't qualify for a low money down loan? An alternative to money down loans is down payment assistance, DPA. If putting money down on a house is a huge hurdle for you, but you can't qualify for a government-backed loan, a DPA might be the right solution. The requirements for these grants or second liens may vary, so it's well worth looking into your DPA options to see what you can qualify for. The bottom line, government-backed USDA and VA loans can allow you to buy a home with 0% down. The fact that these loans are backed by the federal government allows lenders to be more lenient with down payment requirements. Both you and your home must meet USDA loan standards to qualify for a mortgage, and you must meet service requirements with a VA loan. You may also be able to get a conventional loan with a down payment. Freddie Mac's Home Possible or Fannie Mae's Home Ready program offers lower monthly payments towards your mortgage insurance and loans with 3% down. You can also get a conventional backed FHA loan with 3.5% down, which could be a great option if you have bad credit. Ready to take the next step towards buying a house? Apply for a mortgage today and get pre-approved. I can help you with that. Just call me. Client will receive $1,250 credit towards down payment if the qualifying income is greater than 50% and less than or equal to 80% of the area median income, or $2,500 if the client's qualifying income is less than or equal to 50% of the area median income. Median FICO score of 620 is required. Maximum LTV, loan-to-value ratio, a method of comparing the amount of your mortgage to the appraised value of the property of 97% or 105% with DPA second lien, which are grants which often offer a lower interest rate on the mortgage loan and therefore a lower monthly payment. Maximum DTI, debt to income, is 45 to 50% as determined by LP, leverage purchase agreement, or just your basic sales contract. They try to make this as complicated as possible. That's why you need an experienced agent like me to break it down. Offer is valid on primary residence only. Offer valid on purchase transactions only. Home Possible investor loan level price adjustments, LLPA caps may apply. Client is required to complete a home buyer education course. Purchase those currently resident and eligible consensus receive a base of $5,000 or a free money home down payment of $5,000, and I can work on the closing costs into the contract for a true zero out-of-pocket transaction. So if your parents can't afford to buy you a house, cool. If they can, give them a big hug and a kiss. For the rest of us, these are the opportunities. Rent is just something else which you know what you can do about that. It does not take a million years and several generations to accomplish. That's it for now. See you later.